A stick-figure trader, wobbling nervously like a poorly drawn cartoon, stands before a massive, glowing chart. The candles are moving like they're threatening him personally. His face? Pure panic. His mouse? Sweaty. His confidence? Missing in action. He whispers to himself, "I know exactly what this chart is telling me. I just can't seem to do the thing I know I should do." And in that single moment, he becomes the perfect example of why most traders lose, not because they're dumb, but because their behavior tackles their analysis and suplexes it through a metaphorical table. Welcome to trading. Welcome to the place where smart people come to get humbled. Welcome to Timmy the Trader. And today, we're beginning one of the deepest journeys you'll ever take into the mind of a trader. Because this isn't just about charts. This is about you. Hey legends, welcome back to Timmy the Trader, where we turn painful trading lessons into entertaining animations and make sure you laugh at least once before the market humbles you again. Today marks the beginning of our most ambitious series ever, a massive two-part story about the real enemy that stands between you and profitable trading. Not the market, not your strategy, not your indicators, your own psychology. And in part 1, we're diving into the brutal truth. Most traders don't lose because they misread charts. They lose because they mismanage themselves. This is where the story begins. This is where the illusions fall apart. This is where we meet traders who can predict price perfectly, but can't execute a single trade correctly. This is where you might see yourself in the fear, the hesitation, the revenge trades, the early exits, the tight stops, the oversized positions, and the decisions you knew were wrong before you even clicked the button. So sit tight, grab a snack, hide your account balance, and let's begin. The trap of, if I just learn more. There's a dangerous belief almost every trader starts with. I just need more knowledge. More indicators, more backtests, more strategies. Then I'll finally be consistent. Yeah, no. If trading were purely analytical, every engineer, every math genius, every spreadsheet enthusiast would already be rich, but they're not. Many of them blow up accounts faster than they can calculate standard deviation, because trading isn't an IQ contest. It's a behavioral circus. And most of us? We're the clowns without even knowing it. You see, being a good analyst means you can look at charts and understand what should happen. Being a good trader means you can actually act on that analysis. Those two skills are miles apart. Like price target and actual outcome apart. And almost every trader learns this the hard way. The day analysis meets emotion. Let's follow our stick figure hero, Vector Vince. Again, because this man's entire personality is built on chart patterns and caffeine. Vince wakes up, checks, charts, sees a perfect setup forming, textbook clean, support holding, volume rising, risk to reward delicious. He knows what to do, but the moment his cursor moves toward the buy button, his brain loads a psychological Windows error screen. What about last week? You lost on a similar trade. Maybe avoid this one? Maybe wait? Wait for more confirmation. No, too much confirmation. Now it's too late. Why didn't you click? Click now. Wait, don't. Do no, yes, no, ah. He hesitates. He doot. He panics. And eventually, he either enters too late or doesn't enter at all. And here's the punchline. His analysis was right. His behavior ruined it. When the trade begins and your brain self-destructs. So let's say Vince actually does take the trade. Congratulations, Vince. You clicked the button. You overcame fear. Now welcome to a whole new world of suffering. Because the moment he enters, something strange happens. Every tick against him feels like a threat. Every tiny pullback feels like betrayal. Every red candle feels like the market is mocking him personally. He stares at the screen like he's watching a horror movie. He checks his phone every 10 seconds. He contemplates exit strategies that make no sense. His carefully planned take profit suddenly looks like it's on the other side of the planet. His stop loss? That thing he promised he'd respect? Yeah, that's now optional. Emotion hijacks analysis. Fear hijacks strategy. Hope hijacks logic. And the chart didn't change. Only he changed. Why this happens? Your brain is from the Stone Age. Here's the real plot twist. Your brain was not designed for trading. At all. It was designed to help your ancestors avoid lions, hunt food, and not die from literally everything. Your brain responds to losses the same way it responds to physical danger with fight or flight mode blasting at full power. Which means, a red candle? Your nervous system thinks it's a predator. A losing trade? Your brain registers it like an injury. A stop-loss hit? Your mind acts like your survival is at risk. This is why traders revenge trade, hesitate, exit early, hold losers, oversize, overtrade, undertrade, panic, get overconfident, repeat mistakes, apologize to their charts, bargain with their monitors, and promise to never do that again, only to do it again 12 minutes later. Your brain isn't malfunctioning. It's doing exactly what it evolved to do. It just wasn't designed for candlesticks. Meet Marcus, the analyst who couldn't trade. Let me introduce another character, Marcus. Marcus is a chart whisperer, a technical analysis sorcerer, a Fibonacci philosopher. People come to him for predictions, and he's right so often it's scary. But when Marcus trades his own account, he becomes an emotional blender set to maximum puree. When it's his money, everything changes. He exits winners too early. He holds losers too long. He sizes too big after wins. He sizes too small after losses. He hesitates on good setups. He chases bad setups. He breaks all the rules he created. He knows exactly what he should do. But knowing it doesn't stop him from sabotaging himself. Sound familiar? It should. Because Marcus is every trader's mirror. Decision fatigue. Why you trade worse in the afternoon. Ever noticed how disciplined you feel in the morning? You journal. You analyze. You wait patiently. You take only the good setups. Fast forward to late afternoon, and suddenly, you're taking trades like a caffeinated toddler playing with crayons. This looks good. That looks good. Everything looks like a setup. Why? Because every micro decision you make throughout the day drains your discipline meter. By the time you've chosen what to eat, which emails to answer, how to reply to messages, which trades to take, how to interpret chart conditions, your self-control battery is running at 1%. And with 1% discipline, bad trades look like great ideas. This is why pro traders limit their active hours. Not because opportunity isn't there, but because their psychological stamina isn't infinite. 2 traders, 1 strategy, completely different results. Let's imagine 2 stick figure traders. Some strategy, same chart, same signals, same rules. Trader A, consistent profit. Trader B, consistent losses. How? Trader A executes. Trader B modifies. Trader A follows signals. Trader B follows feelings. Trader A takes the stop. Trader B hopes. Trader A holds to target. Trader B bails early. Trader A treats trading like a process. Trader B treats trading like a personality test. Some strategy. Different behaviors, wildly different outcomes. This is why trading is a behavioral profession disguised as an analytical one. The most dangerous trades are the ones you win early. Wins are deceptive. Losses hurt you, but wins trick you. A few big wins in a row, and suddenly, you feel invincible. You size bigger. You loosen rules. You trust your gut. You take setups you'd normally ignore, and then the market spanks you back to reality with a liquidation candle. Confidence is great. Overconfidence is account destroying. And overconfidence comes from wins. Not huil. The trader glow up that quickly falls apart. Our hero, Vector Vince, stands tall. He has trained, he has journaled, he has meditated. He has watched 48 hours of motivational trading content at 2x speed. He whispers confidently, "I am now a disciplined trader." 5 minutes later, the market opens. A candle moves. Just one. One. And suddenly, he dives headfirst into a revenge trade so aggressively that even the platform asks, "Are you sure, bro?" What happened? Simple. You don't cure trading psychology in a week. You barely survive it. Vince didn't evolve. He just got a temporary buff. And it expired. Marcus tries mindfulness and fails immediately. Marcus, the analysis genius but execution clown, decides he needs inner peace. He buys candles. He buys calming music. He downloads 3 meditation apps. He breathes deeply. The market opens. A wick appears. Marcus screams, "Meditation is useless. The market is attacking me personally." He throws his chair. He slams market buy. He regrets everything. And this is where we learn an important lesson. Calmness is not the absence of emotion. Calmness is the ability to not yeet yourself into stupid trades when emotions spike. Marcus is still learning. Poor guy. Why every trader has 2 personalities. A trader has 2 modes. Pre-market mode. I will wait patiently for my setup. I will not chase. I will not move my stop. I am a Zen master. I am one with the chart. In trade mode. Au jet ma aud we sit red, we sit breathing like that. It's not your fault. Your brain wasn't designed for this. In fact, the human mind responds to losses with the same chemical reaction it uses for physical danger. To your caveman brain, a negative $50 loss and a tiger attack are basically identical. And honestly, sometimes the tiger would be less stressful. The discipline trap. Everyone says, be disciplined, but nobody talks about the psychological booby traps hidden inside that word. Discipline is hard because your emotions want instant gratification. Your brain hates uncertainty. Your ego hates being wrong. Your eyes deceive you during drawdowns. Your hope and fear constantly fistfight inside your skull. Trading is basically mind, stick to the plan, emotion, but what if we ruin everything? And guess which one usually wins? Not the logical one, not the one with the plan, not the one that watched 40 hours of trading psychology videos. No, the emotional gremlin wins every time, unless you practice controlling it daily, forever. The sticko figure market doesn't care about you. This is important. The market isn't sentient. It isn't out to get you. It isn't stalking your stop loss. It isn't mocking you. It isn't waiting for you to enter so it can immediately reverse. But emotionally, it feels like it is. We've all yelled at the chart like, "Why did you wait for me to enter before going the other way?" Because it hurts. Because it feels targeted. Because we take trading personally. But the truth is, the market is not your enemy. Your emotional reactions are. The great overconfidence disaster. Now let's talk about the greatest source of stick figure carnage, winning streaks. After 3 wins, traders become enlightened beings, financial philosophers, semi-professional gurus, risk management escape artists, self-declared legends. They size up. They bypass rules. They say things like, "I have ascended beyond stop losses." And then they lose one trade. One. And immediately collapse like a folding chair at a sumo wrestling tournament. Confidence isn't the enemy. Overconfidence is. And overconfidence is just fear wearing sunglasses. Journaling. The thing everyone knows they should do, but doesn't. Vince opens his journal. He writes, "Today I will be disciplined." 10 minutes later, he revenge trades 4 times. He returns to the journal. He writes, "Today went differently." Journaling is the cheat code of trading psychology. Not because writing makes you better instantly, but because journaling forces you to face your mistakes. Traders who don't journal repeat mistakes. Traders who do journal repeat them slower, which is improvement. Kind of. The moment everything finally makes sense. Every trader eventually reaches this magical moment of clarity. It usually happens after a blown account, a full emotional meltdown, a long walk, a dramatic stare out the window. They whisper, "I get it now. It was never the market. It was me." And that's the turning point. The moment where discipline becomes possible, mistake become leçon, patience becomes natural, consistency becomes visible, not because their strategy changed, but because they did. This is the moment Vince reaches, and Marcus, and you. But don't celebrate too early, because the market is about to test your new self. The final test of a sticko figure trader. Vince waits. He breathes. He analyzes. He enters a trade with perfect execution. It goes smoothly. It reaches halfway to the target. And then, the candle wicks violently. This is it. The boss battle. The emotional final exam. The moment where old Vince would panic exit, move his stop, scream at the monitor, emotionally call his broker, blame the Illuminati. But this time, new Vince stays calm, holds his position, trusts his plan. The candle recovers. Price hits target. Victory. He didn't beat the market. He beat himself. Marcus evolves. Sort of. Marcus takes a trade. He sets his stop. He sets his take-o profit. He sits on his hands. He whispers, "Discipline. Discipline. Discipline." Price moves up. He wants to exit early. He resists. Price pulls back. He wants to panic. He resists. Price wicks. He screams internally. Price finally hits target. Marcus jumps up and yells, "I did it. I didn't sabotage myself. Let's go." He cries tears of joy. He hugs his monitor. He thanks the trading gods. Progress. The great sticko figure trading wisdom. Here's the truth that every trader eventually understands. Strategies get you into trades. Psychology determines whether you survive them. Your edge isn't just your analysis, your indicators, your setup. Your edge is your discipline, your execution, your emotional self-control, your consistency, your ability to think clearly under chaos. This is why trading is an internal battle, not with the market, with yourself. And the moment you master you master trading. All right, traders, buckle up, because this is where the emotional stability of the entire stick figure universe implodes. Vince and Marcus stand proudly. They've evolved. They've grown. They've trained their psychology. They are disciplined, consistent, debt